The reason why price is stopping right here is because more retail traders are piling into short positions, all right? And if you compare the positions held by retail traders from last week to this week, you can see that they're starting to get in short. How's it going, fellow traders? Magic Trader here, and this is your CFTC report for the data that was reported on July 19, 2022. Here's a brief snapshot of the positions held by the institutions as of that date. And so here we are again. Welcome back. We're going to do another episode here where we take a look at the bank's positions. There's some massive things taking place in the markets right now, some massive things. If you've been following us on Telegram and on Twitter and on our YouTube channel here, you will know that something big is about to happen in the markets. Okay, so we're going to go through that today. And so let's start like we always do by taking a look at the positions held on gold. And so here we have it. What we can see is over the last few weeks, we can see they have been aggressively closing off their long positions. Okay, the banks had 267, they dropped them to 251, now 241, and look what they are doing with short positions. Okay, adding short positions as price is declining. Now, what is happening in the markets right now? You see what's happening right now in the markets here at the bottom? What you see is a retracement up. Now, we have talked about this within the community, our trading community, why price is reacting to the upside right now. But I think what's really important to point out is that at the end of the day, the reason why price is stopping right here is because more retail traders are piling into short positions, all right? And if you compare the positions held by retail traders from last week to this week, you can see that they're starting to get in short. They're starting to think, okay, maybe we had this wrong. Maybe we shouldn't be going long all throughout here and here and here and here and here. And they're saying, okay, fine, let's start getting in short now. Maybe price is going to drop. And so now with that, what do you think? The banks are going to allow retail traders to jump on the bandwagon and carry price to the downside? Very unlikely. All right. So what we're seeing is a very good chance that price is going to make a rally to the upside. All right. So be aware of that. The data is pointing in that direction with longs closing, shorts increasing. So I'd be very careful with opening up short positions at this time. All right, so let's take a look at oil. What do we have with oil? Look at that. Long positions, 396, 394, 375, 374. Nothing big happening here. They're closing off long positions, okay? As price was declining, so makes sense. Short positions are still very cooled off. 114, 106, 103. Not much going on there. And should we be surprised with the fact that nothing's going on here? Not really, because what have we said for quite some time now? We got a weekly range taking place right now, and we expect this range to continue for quite some time, probably until the end of the year, and then next year we'll see something take place. All right? Something else can happen, but the odds are this range will hold for likely the rest of the year. So we'll continue to monitor that one as it plays out. All right, here's the US dollar positions. Look at longs. We had a big aggressive move to the upside. Okay, very big aggressive move to the upside. And now look what they do at the highs. Profit taking 54, 52, 51, 50. Okay, profit taking at the highs. Within where? We pointed this out already. Institutional supply. Okay, so pressure is to the downside. Gold is doing the opposite. Pressure to the upside. And what do you think retail traders are doing? If you look at what has been happening in the markets and what they're doing with gold, it's very likely that they're getting in more long positions in terms of the dollar. And so that just increases the odds that we're going to be seeing a drop in price. Okay? And here's an interesting thing that I'll point out. Last week, I pointed out to members and those in the Telegram channel that there was a very bullish Wall Street Journal article, Dollar Rally Gains Steam Amid Fears. And this is what typically we see take place right before the reversals are about to come in. So they come in, they make these statements that seem very bullish for the dollar, and then we have a reversal. All right, same thing with the market, same thing with gold, same thing with the euro. This is a constant pattern that we're seeing over and over again. So this is something that I just want to point out to you and have you be aware of as we go forward. Okay, so let's take a look at Aussie. Aussie, not much going on here. Long positions, they added some to their longs, but not much going on. Look at shorts, 75, 72, up to 73. We're not really moving much, okay? And you can see it here. Look, 47, 41, 43. We're still a little bit bearish, but nothing too aggressive, all right? Okay, so when we look here on the weekly chart, we can see that price just fell within pips of hitting our monthly target, just pips. And now we're seeing the bullish pressure to the upside. Now, in terms of retail sentiment and their positions, we don't see a massive shift, okay? They're adding more shorts, but it's very, very little. But they are bearish, okay? Which, again, leads us to suspect that we're likely going to see more bullish pressure come into play over the next a couple weeks, maybe even 3-4 weeks. Alrighty. Okay, so let's get out of here and go into USCAD. So USCAD hitting supply, we've known that for quite some time. Long positions, 41, 38, 35. Looks like they've been taking profits on long positions. They're also reducing their short exposure, 45, 41, 42. Bottom line, net positions is somewhat bearish, but it's not like it's aggressive, okay? Their bearishness is not aggressive. If we take a look at the coloration of the cells here, it's with a tinge of bearishness, but mostly neutral. What does that tell me? Don't make any big decisions on the US CAD right now because the banks are not heavily biased in any direction, okay? So let's just keep that in mind. Oh, and I should mention that if you look at the retail sentiment from last week to this week, there hasn't been that much of a change as well. US Swiss, look, long positions getting aggressive. They're coming out of cooled off territory, which we entered when contracts expired back in June 14. Now we see them increasing their long exposure, 13, 15, now 17. Shorts remain cooled off. They've been increasing those. But if you take a look at the coloration of the cells here for the sentiment, it is bullish, but not aggressively bullish. All right. So what does that mean? Well, I think if you take a look at the monthly chart, you can see monthly supply is in play. Isn't that something similar that we've been seeing on the other charts? So pressure is to the downside. We got our downside target here. We do think that there's going to be more bearishness coming in to the market. Okay, some more bearishness. And if you take a look at the retail sentiment, you can see that they're mostly bullish, which again is the opposite of what's really taking place in the market right now. Euro US dollar. This one's a good one. We look at long positions. They've decreased them. 197, 197, 195. Not a big amount. But we know that overall, the sentiment has been that they've been taking profits on long positions, okay? And then they came in and increased their short positions. Look at that, how aggressively. 213, 211, 200, and then the last 4 weeks, 200, 213, 222, 238 short. Okay, look at the bearishness here. You see that in net positions, bearishness? Okay. So another thing I'll point out is take a look at the 13-period average. Shorts, long positions, I mean, are well below the average, and shorts are well above the average. Okay? What does that tell you? Something's going on. Okay? They're increasing their short positions and short exposure on the euro US dollar. But they're not ready to make an aggressive move because if you take a look here, The coloration of the cells, somewhat neutral, all right? But something is brewing. And if you take a look at the retail sentiment, they are just a tinge more long than they are short, but they've been long as price has been declining for some time now. Okay, so they're hurting. Retail traders are hurting because this whole time that price was dropping throughout the year, retail traders were getting into long positions. So right now they're slowly reducing their long exposure, getting into more short positions as price is reversing to the upside. Pound, this one's been very clear for quite some time. They've been clearly bearish for a while now. Okay, look at that. 110, 104, even though they took some profits recently, they're still very bearish. Okay, and look at price, big drop to the downside. Last week, we got a push to the upside, and we suspect that this will follow along with what the euro is doing. And take a look. What is retail? They've been holding long positions all the way as price has been dropping. Okay? Next week, over the next few days, maybe that sentiment will change, and we'll start seeing them getting into more short positions, just like what we're seeing with the euro. US dollar, Japanese yen. Very aggressive move to the upside, which took place over many months. And now they start profit taking. From June 14, 2022, when contracts expired, they reduced their long positions from 102. Now we're down to 95. Okay, it's not a massive move, but it's a move. We look at short positions. What do? They increase them. Interesting, huh? 18 to 35,000. Why would they increase them? I don't know. Maybe it's because they're preparing for a move to the downside. That's possible. Interesting thing is that we get the bullish article that came out, which we pointed out earlier, right? And look at retail positions. Look how red they used to be versus what they are now. Okay, they were very short as price was rallying. And now here at the highs, when all the bullish articles start coming out, they start increasing their long exposure just a tad. They're going to be caught on the wrong side. Look at the coloration here. Look at the coloration of the cells. Green here. And look at how neutral they're becoming. Okay? Giving you an indication of what is coming. Look at your short average was 23. We're at 35. Above. Look at your long average. 106. We're at 95. Below. You see the shift here? Shift of momentum? That is what we're talking about. And last but not least, the Kiwi. Not much going on here again, just like the Aussie, increasing longs as price starts to move to the upside. And shorts are not doing much. Coloration, look here. Long, short, okay, blue. Not much going on. Very cooled off. Net positions have been decreasing in bearishness. And what we can see is that retail traders are mostly long. And they've been long as price has been declining straight into that area of demand. Make sure you like, subscribe, leave some comments down below. Let us know how you like our analysis. And we'd really appreciate that. Thanks for all the support. You can reach us at www.whiteoakfx.com. That is your CFTC report for this week. Enjoy the rest of your weekend, and we will see you throughout the week. Take care, everyone.